Welcome to the deep dive. Today, we are taking a really crucial look at probably the fastest growing intersection in finance right now. Real world asset tokenization, RWA.
Yeah, absolutely.
And specifically, we're diving into Ondo Finance, ticker ONDO, arguably the highest profile sort of infrastructure play in this whole space.
And it's the infrastructure that, traditional finance, TradFi, seems to be lining up for. Our sources really highlight the scale, the ambition here.
Right.
We're talking about bringing assets like U.S. Treasuries, blue chip stocks actually onto the blockchain.
Mm-hmm.
Larry Fink, BlackRock's CEO, famously predicted this whole tokenization market could hit over $1 trillion by 2030.
$1 trillion.
And Ondo Finance. It's designed to be that bridge, the bridge to that, $1 trillion future.
Okay, so our mission today then is to try and figure out this puzzle the data is showing us. Because on one hand, you have these long-term forecasts driven by a serious institutional adoption, BlackRock, PayPal, names like that looking wildly bullish.
Right, the fundamentals look strong.
But on the other hand, the short-term technical indicators, right now, they're flashing some pretty clear cautionary signals. So we need to reconcile that, fundamental strength with this current technical weakness.
Okay, so let's ground ourselves. We're using data from today, September 29, 2025. The current ONDO price is hovering around 89 cents, 0.989 cents.
Okay.
Technically speaking, market sentiment right now, it's bearish. The indicators are suggesting selling pressure.
Bearish, okay.
But interestingly, the broader investor mood, if you look at the fear and greed index, it's smack in the middle, neutral, 50.
So a technical warning sign, but everyone's feeling neutral. Calm.
Exactly. It's that juxtaposition we need to explore.
All right, let's unpack that short-term caution right away. If you've got institutions, the size and seriousness of BlackRock committing to this tech, how can the immediate trading signal suggest a big price drop might be coming? What are the sources telling traders?
Well, the technical analysis is pretty stark, actually. If you look across the main indicators, there's a heavy skew. We're seeing 20 technical signals pointing towards sell or bearish right now.
20, wow.
Yeah, compared to only 8 suggesting bullish movement. And the price itself, it's consistently trading below key long-term trend lines.
Like the moving averages.
Exactly. The 50-day and the 200-day simple moving averages. It's sitting below both. That usually indicates, a clear underlying weakness in momentum.
Okay, and the consequence of that weakness, what's the forecast saying?
Based on these trends, the immediate technical forecasts are suggesting the price could potentially drop by, as much as 25%.
25%?
Yeah, settling maybe around 67 cents by the end of October 2025.
Ooh.
And this downside prediction, it really stands out against a very minor short-term high predicted in the next 5 days or so. Suggests the resistance level is pretty strong.
Right. What about the RSI? Is it oversold?
No, that's the thing. The 14-day RSI, it's only at 39.28. Basically neutral.
So not screaming buy the dip just yet.
Not at all. It means there's technically plenty of room for that downward pressure to actually happen if the bears take control.
A 25% drop is, it's serious. If the fundamentals are supposedly so strong, why isn't the market looking past this current weakness? Does this source material give us any clues about why there's this technical drag?
It does, actually. And this, I think, is the key insight that connects the short-term pain to the long-term potential.
Okay.
The issue doesn't seem to be adoption. It's more about supply dynamics.
Tokenomics.
Exactly. We know the total Ondo supply is capped at 10 billion tokens. But as of mid-2025, only about a third of that, roughly 33.9%, was actually unlocked and circulating.
Right.
Now, our sources reveal that nearly 6 billion ONEO, that's a huge chunk, are set to be released linearly, sort of drip set into the market between 2026 and 2029.
6 billion more tokens coming online.
Yeah, unlocked over 5 years starting back in January 2024. That massive guaranteed supply increase, that overhang, it creates this persistent headwind, dilution risk.
Okay, that makes sense.
And it looks like the market is already pricing that risk into the current technical weakness.
Right. That puts the bearish technicals into immediate context then. It's not necessarily a question of if the project itself works, but more about whether the institutional adoption, even as strong as it is, can absorb that inevitable supply shock that's baked in for the next few years.
Precisely. It's a risk calculation the market is making right now.
Okay, let's pivot then. Because if big institutions are willing to look past that risk or navigate it, they must really believe in what Ondo actually does. So for anyone listening who isn't deep in the weeds, how does Ondo Finance actually bridge this gap between TradFi and the blockchain? What are the nuts and bolts?
So Ondo Finance founded back in March 2021 by Nathan Ullman and Pinka Sarana. It's essentially like a sophisticated financial engineering firm, but for the decentralized world.
Okay.
Their whole goal is to tokenize high-quality, real-world assets. Think U.S. Treasuries, cash equivalents, even publicly traded stocks. Bring them on-chain using smart contracts.
Making them accessible 24/7.
Exactly. Accessible 24/7, more transparent, potentially more efficient.
So what are the main products? What assets are they moving primarily?
They have a pretty specialized suite right now. There's OUSG, that's their tokenized U.S. Treasuries product designed for stable yield.
Right. Treasuries on-chain.
Then you have USDY, that's a yield-bearing stablecoin backed by a mix of treasuries and cash, and OMMF, which is their tokenized money market fund.
Okay, sounds very institutional focused.
It is. This is like building the plumbing, specifically designed for regulatory acceptance. They also run Ondo Global Markets, which is a platform focused on trading tokenized versions of public stocks, like Apple or Tesla shares.
Interesting. And I remember reading they also built their own specific environment for this. It's not just operating on, say, Ethereum.
That's right. Big development.
Yeah.
In February 2025, they launched Ondo Chain. Now, this is a permissioned layer 1 blockchain.
Permission. Okay. What does that mean practically?
It means it's purpose-built for institutional RWA tokenization. It keeps the benefits of blockchain, like openness and efficiency, but it layers on the regulatory compliance features, KYC, AML checks, that sort of thing, that big institutions absolutely need before they'll commit serious capital.
Got it. Compliance baked in from the start. And the Ondo token itself, how does that fit in? Is it the fuel for this system?
Yeah, you could call it the lubricant or the fuel. It functions as the utility token. It's used for governance through the Ondo DAO, which, by the way, currently oversees another related protocol called Flux Finance.
Okay.
And maybe more importantly, long-term, as Ondo Chain potentially becomes this standard for institutions, the Ondo token will be needed to pay for transaction fees and other services on that permission network.
Right, driving demand for the token itself if the chain gets adopted. Okay, so we have the architecture. Now let's look at the validation. If the short-term price is maybe being held back by future token supply, institutions are clearly looking beyond that. What are the specific milestones, the partners, that really confirm Ondo is gaining traction?
Well, the adoption numbers are already pretty staggering for this niche. As of May 2025, reports showed over $1.1 billion worth of treasuries had already been tokenized using the Ondo platform.
$1 billion, that's real money flowing through.
That's real money, yeah. Not just pilot projects.
And the biggest headline involves BlackRock, right? How deep does that integration actually go?
It seems pretty deep, a real operational commitment. BlackRock isn't just kicking the tires. They're actively tokenizing treasuries on Ethereum and, reportedly, 6 other chains using Ondo's tech.
6 other chains, too. Wow.
Yeah. And crucially, they're moving OUSG funds, Ondo's tokenized treasuries, directly into BlackRock's own BUIDL fund. Now, for listeners, the key thing about BUIDL is it enables instant 2400, 37, 365 subscriptions and redemptions for treasuries.
Bypassing the old T+ settlement times.
Completely. Gets rid of those antiquated delays you see in traditional finance, and Ondo is a key part of enabling that speed and efficiency improvement.
That's a massive vote of confidence. Beyond BlackRock, who else is helping build out this ecosystem? Any other big names?
Yeah, the partnership list is pretty impressive. It reads like a who's who of TradFi and crypto infrastructure.
Yeah.
You've got PayPal, Google Cloud involved.
Google Cloud, interesting.
And major digital asset custody providers like Copper and Komainu. That's crucial for institutional trust and security.
Absolutely. Custody is key.
They also integrated with Pendle, which is a specialized protocol for yield stripping.
Okay, what does that enable?
It allows clients to separate the yield component from the principal component of their tokenized RWAs. That's a pretty sophisticated financial tool, bringing the kind of capabilities you see on Wall Street onto the blockchain.
Right. Offering sophisticated TradFi products in a tokenized format. And what about the regulatory side? That focus on compliance seems to be getting noticed.
It really seems to be paying off.
Yeah.
Regulatory validation is incredibly hard to get in crypto, as you know.
Yeah, it's rare.
But Ondo Finance was actually mentioned by the White House in its July 2025 Digital Asset Markets Report. They were highlighted as a leader in compliant tokenized finance.
Mentioned by the White House. Okay, that's significant credibility.
Unparalleled institutional credibility, really. And then you add their Global Markets Alliance extending to 25 members, including names like B&B Chain and BitGet Global. You can see this clear strategy for global reach taking shape.
That's powerful context. It definitely makes that current technical dip look well, maybe less concerning when you realize the underlying adoption engine is running that strong. So what does all this mean for the long-term price predictions, even factoring in that token supply risk we talked about?
Well, the long-term forecasts reflect both the huge potential and, frankly, the volatility of this emerging sector.
Yeah.
For 2026, the general consensus seems to put Ondo somewhere in the range of $2 to $8.
$2 to $8. That's a decent jump from 89 cents.
It is. And those increases are seen as dependent on, continued growth in tokenization volumes and more high-profile partnership announcements. One source even pointed to July 2026 specifically, predicting a potential 180% increase from today's price just in that month.
Okay. How does it look further out, say, towards 2030, when that RWA market might actually be measured in trillions, like Fink predicted?
Yeah, here we see a pretty wide divergence in the forecasts. One more conservative model suggests a maximum price of around $3.89 by 2030.
Still a 330% plus gain from now? Not bad.
Not bad at all. But the really aggressive forecasts, that's where the real excitement is. Some suggest Ondo could potentially trade anywhere between $25 and $41 by the end of the decade.
$25 to $41. Okay, that's a different league entirely. What's the catch?
Well, that top-end scenario is almost entirely predicated on Wall Street giants not just using Ondo, but fundamentally integrating it as their main gateway for putting assets on-chain. Massive adoption.
Right. So what are the key macro factors that could push it from, say, that $4 forecast towards that $40 one?
Two main things mentioned: regulation and utility expansion. We'd expect to see Ondo continue expanding onto more chains, especially major layer 2s on Ethereum, making it easier to access.
Broader reach.
And political sentiment is cited too. Some sources note that a more supportive regulatory environment, potentially influenced by, say, politicians like Donald Trump, who've become more publicly pro-crypto, could dramatically accelerate institutional uptake beyond what we're seeing now.
Interesting political angle there.
And fundamentally, the argument is Ondo is positioning itself to actually reinforce U.S. dollar dominance globally. How? By making U.S. treasuries the bedrock of global finance, instantly liquid and accessible to anyone, anywhere, through tokenization.
That's a big picture view. Okay, let's try to synthesize this. Final thoughts. Ondo Finance feels like a unique kind of crypto play. Its success isn't just tied to, the next DeFi trend, but really to the seeming inevitability of traditional finance upgrading its old infrastructure.
Exactly. You're essentially betting on BlackRock, PayPal, and others proving this RWA model works at scale.
And the short-term bearishness, while definitely something to watch, it seems more like a technical hurdle, reflecting that known supply risk rather than some fundamental doubt about the project itself.
I think that's a fair summary. And that actually leads us to a final kind of curious market dynamic for you to consider. Ondo currently shows a strong positive correlation, 0.718, with the top 100 non-stable coins. So generally, it moves with the broader crypto market.
Okay, that makes sense.
However, it also shows a distinct negative correlation with several other major altcoins. Specifically, OKB token at negative 0.736 and Zcash at negative 0.490.
Negative correlation. So Ondo goes up when they go down and vice versa. It's unusual.
It is quite distinct, and it raises an important question for you, the listener, to maybe mull over. Why? Why is Ondo actively moving in the opposite direction to certain established crypto assets? Does this negative correlation signal that Ondo has successfully carved out its own unique TradFi-focused niche, completely separate from the rest of crypto? Or does it maybe just reflect a different kind of risk profile, one driven more by institutional flows than typical crypto market sentiment?
Interesting. Something to definitely explore further as you continue your own deep dive into the RWA space.